All right, everyone. Good afternoon. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. Quick sound check before I dive in here. I want to welcome everybody joining me via GoToWebinar and YouTube as well. Thank you, Santi. Appreciate it. Hope everybody's doing well. Cold and rainy here in the southeast. I know we've got a big storm kind of blasting through the east coast here in the U.S. Should make its way offshore by Thanksgiving, which is nice. Shortened week this week, right? Thursday, stock markets closed. Friday, abbreviated session. Markets closed at 1 p.m. So shortened session on Friday. And then we'll ramp things up again next week. Just to introduce myself, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. Always like to introduce you guys to our team. This is our education team. These are the folks that you'll hear in our coaching groups and our different webinars and educational courses, daily color guard reports, strategies of the week, all the education content that we deliver. And I always like to say, when I first started with VectorVest 17 years ago, the education team consisted of maybe two people. Steve Chappell was one of them, gentleman right to the next to me there. It's obviously grown over the years. We've evolved tremendously. Back then, our education focused primarily on the VectorVest program. You know, all the bells and whistles, all the tools, teaching our subscribers our method of a stock analysis and market analysis. And it's evolved over the years because now we teach folks how to trade options. We teach investors how to manage retirement-minded portfolios. We teach swing trading strategies. We even do a little day trading in our jockey club. So very proud of these folks, well-rounded education team, and we have you covered, meaning doesn't matter the type of portfolio you're managing. We have and we will teach you strategies that are suitable for those types of portfolios. Swing trading, options, income investing, retirement investing, we got you covered. So here's what you're going to learn today. First, the difference between fundamental investors and technical traders. There is a significant difference in how both camps approach the stock market. Fundamental analysis evaluates stocks and tries to measure the company's intrinsic value. Technical analysis just focus on statistical and historical price trends and looks for favorable price and volume situations. Both methods are used for research and for forecasting future price direction. But the way they go about doing that is quite different. What I'm really here to do today is kind of maybe introduce or teach you the VectorVest method of merging the two. Merging the two is not a novel concept. So the very best traders will frequently combine fundamental and technical analysis just to have a more well-rounded decision, more informed decision. The idea is to leverage the strengths of both of these different approaches to compensate for their weaknesses. Okay? Blending the approach is very time consuming, but the VectorVest method of doing that is not. We'll explain that. How to quickly and easily, and finally, how to quickly and easily identify the best trades. Okay, that's very important, right? You can understand basic concepts, but looking for trades and finding stocks to buy, that's the rub, right? You want to be able to do that quickly and easily as opposed to spending hours and hours and hours doing it. All right, so that's what you're going to learn today. If you guys stick with me to the end, I will share with you a copy of today's slides. Okay, a lot of content in here, a lot of good slides in here for you guys to look back on. I'm recording this session as well. You'll get a recording of this session later this evening. And again, if you stick with me to the end, I will share with you a copy of today's slides. Okay, so the two different camps of investors. First, there's the fundamental analyst. Okay, the fundamental analyst uses company's income statements, their balance sheets, their cash flow statements. They parse over earnings reports. Um, they look at macroeconomic factors such as interest rates and inflation. Those two factors there affect long-term value, and that's what a fundamental analyst is doing. He or she is looking for long-term value. Okay, so this obviously can become very time consuming, can it? Right? If you have to first gather this data and then go through it, and if you really know what you're doing, you're going to come out with an intrinsic value. It's very hard for kind of the average investor to crunch all those numbers, right? But this is what the fundamental analyst is doing. Okay? They're looking for intrinsic value. They know what the price of the stock is. Okay? They know what the price of the stock is. That's the market value. They're not concerned with market value. They want to know intrinsic value. And a favorable candidate would be one where the market value is less than the intrinsic value. Unfavorable candidate most times will be where the stock's price is above its value, making it an overvalued asset, not a very attractive investment for a long-term kind of buy and hold investor. Okay, so that's what the fundamental analyst is looking at. The technical analysis is quite different. Okay, it requires a trader to evaluate historical and statistical price and volume data. Unlike fundamental analysis, which focuses on intrinsic value, tech analysis looks at price and volume over time. They feel that the fundamental data is already baked into the stock's price, and market sentiment and historical behavior is what's going to change price direction and move price. Okay? So a technical analyst will look at moving averages. They'll look at support and resistance. They'll look at price patterns, breakouts, breakdowns, technical indicators. Get them both in a room and they will argue till they're blue in the face on who's right. We feel that they're both right. Both have merits. Okay? And what we want to do is improve or increase the probability of a successful investment or a successful swing trade by blending the two. Okay, so you might initially gauge what the intrinsic value of the company is through fundamental analysis. Right? Again, the long the approach to take would be to evaluate financial statements, market trends, industry and sector strength. So you're evaluating the company's fundamentals first. You're determining what the intrinsic value is. How much upside do I have here long term? Is this a safe investment or a risky investment? Okay, you're looking at earnings and earnings growth, right? If they pay a dividend, even better. So you're looking at these factors to determine whether the stock or the company is fundamentally sound. Later, what you then can do is apply technical analysis to pinpoint entries and exits. This then involves, looking at price charts and patterns and other different types of indicators. So what we want to do is merge the two approaches. Okay? Starting off with analyzing the stock based on its fundamentals, because I'm not going to trade a junk stock, right? If I'm looking for a swing trade, a short-term swing trade, looking for an attractive price and volume situation and a potential breakout or reversal, the probability of that trade being a successful and profitable one increases with the strength of the company, right? Again, I'm not going to swing trade a junk stock. Very rarely will I do that. Dr. Lito once said that, the best portfolio management begins with buying the best stocks. So you want to kind of limit the pool of stocks that you are fishing for based on the strength of the indicator. So let's take a look at McKesson Corp. November 13th, 2023. This is a snapshot of all of our indicators, basically just taken from the stock viewer. So on November 13th, 2023, the stock price was at $470.64. We think it's worth, we apply a value to every stock every day. We think it's worth $634.01. So far so good. You got a stock's price, the market value, much lower than the intrinsic value. And the intrinsic value includes all of that financial data that you are required to go through in order to come up with that number yourself, or a number, a value, right? So we take all that data, folks, and we provide you guys with that type of information. So I said earlier that it could require a lot of time on your part, but with VectorVest it doesn't, because we take all that data, we crunch the numbers, and we spit out indicators. So again, so far so good. That's really the first thing that you want to determine. I know I'm paying $470 for this stock. It's worth $634. Great. Let me continue though, and let's determine long-term price appreciation potential. And is the investment risky or safe? Relative value looks at long-term upside potential over the next 1 to 3 years on a scale of 0 to 2, 1.42, excellent on a scale of 0 to 2. So this stock is likely to outperform a safer investment in a AAA rated bond by 42% over the next 1 to 3 years. Relative safety is above 1, which indicates that the stock is not very risky. It's a rather safe investment. Both of those are fundamental data indicators. You get to the earnings per share. It's an annualized earnings per share, leading 12-month indicator, $29.89. That's an earnings yield of 6.35%. Earnings growth rate at 20%. That's really good. The stock also pays a dividend, small, but a small 0.5% yield here. Okay, so that's always good. Stocks that pay dividends generally earn more than they pay out, or they earn enough to distribute some of those profits to their shareholders. That's always good for a company. So this is the first part. This is your fundamental analysis. Determine whether the stock is undervalued or overvalued, what the long-term price appreciation potential is, whether it's safe or risky, and other earnings and dividend data to help you determine, again, whether the stock is fundamentally strong or not. Here's a chart of McKesson from October of 2021 to October of 2022. Stock never got a sell rating, stayed above its stop price the entire time. So this is a stock that you could have bought back in November of 21 and just held it through, right? Indicators are strong, even back then. Okay, RS above 1, earnings growth rate at about 16%, relative value 1.3, earnings per share rising and positive. So anytime during this 1 year period you buy McKesson, it doesn't receive a sell, so you hold it. This is a stock that is suitable for your retirement portfolio. This is a stock that you can buy and hold for a rather longer period of time, as long as the underlying fundamentals of the company don't deteriorate. Or if the stock gets a sell rating from VectorVest, I would consider selling it anyway. But it hadn't. It hadn't gotten a sell rating at all during this time. Fundamentals did not deteriorate. You're buying the stock and you're holding it. So what's to say, right? Because we talked about the different portfolios that you might be managing, right? You might be managing a retirement portfolio where this type of stock should be in it. Okay, it's more of a long-term portfolio, right? Not much management. Then you got your options portfolio. You might have a swing trading portfolio as well, where you look to kind of supercharge your overall portfolio returns. Because when a retirement portfolio, what are you looking for? I don't know, 8 to 12%, maybe. That's a nice annualized return. I think with swing trading, you can kind of jump that up, maybe double it. Okay, you're trading more often. which of course, with good risk management, it would make sense that you could make more money, you trading more often. So I'm focusing now on the hard right edge. Okay, the hard right edge. What do I see? So if I'm looking um, to buy this stock now, as of October of 2022, am I going to buy it now? Well, if I don't own it yet, I don't know if I'm looking to buy it now. First off, it's a hold. Fundamentals are still strong, but it's a hold rating. And it's kind of moving sideways here, right? It kind of pulled back off of almost a little double top here, but there's a resistance level up here, pulled back, and is now capitulating a little bit above our stop price. So I'm not really sure if I want to buy it yet. Let's take our fundamental analyst hat off now. We've done that already, right? We've done that legwork where we've determined that it's a good company, it's fundamentally strong, and it's undervalued, and it's safe, and it's got a good upside potential and strong earnings. That hat comes off now. That fundamental analyst hat comes off. We put our trader's hat on, our technical analyst hat on now. I'm trying to look for a buying opportunity, either as a short-term trade or as a long-term investment. Because what might happen here? You buy this stock. Let's say you want to hold this stock now. Buy this stock now and hold it long term. You say, okay, I got a good price. I'm getting a good price, $350 roughly. It was just recently, $400. I'm getting a good price. Well, what happens if you just buy it for no reason and not really focusing on the short term outlook, and the stock breaks down and you wind up digging yourself a little bit of a hole right away? Nobody wants to do that. So instead of just, hey, let me buy it now. I know I'm holding it for years, hopefully. I'm just going to buy it now. It's a good price. That's not how you maximize returns in the long run. So what I'd be looking for, what I do see actually, right? So you got a stock here that's, again, pulled back off of a little double top, a little resistance area. Where is it settled in? It's settled into support. It used to be resistance back in May of 22, June of 22, July of 22, August of 22. It was resistance, and then the stock price broke out, which makes that zone now support. Here's our first retest of that support level. I don't want to buy at support because support could break. You buy off of a retracement off of support. Okay, so that's what I would look for here, whether it be a long-term investment entry or a short-term swing trade entry. Okay, so little mini channel there at support, right? High there would be my trigger level. I would look for price to retrace from support, make a new mini high, and that would be my signal. I know you're probably saying, well, if you would have bought it the day before, you would have made more money. I know. But you don't buy at support because, again, price could break down through it. Just like you don't buy at resistance. You wait for price to break above resistance. You don't short at support. You wait for price to break down through support. Okay? So nice breakout there on good volume. Stochastics oscillator, another indicator. I'm not going to throw a ton of indicators at you guys, but two of my favorites are support and resistance and stochastics. So if I see a favorable situation here where price has retraced down to a support level, the stochastics oscillator, which oscillates between 0 and 100, fell below 20 and has now crossed above 20. Boy, that's a strong signal. When the stochastics oscillator has gone from oversold to trending and the price of the stock has retraced from support, that's a very strong signal. Again, it's a signal that an investor can take if they understand the signal. Here's the thing, this approach does provide a more complete understanding of the stock. Okay? It combines fundamental risk analysis with the timing of technical analysis. So it can be suitable for short and long-term strategies. However, blending both requires an understanding of both. Okay? So even if you're an investor and you begin to study or learn a few of these indicators to help you maximize profits long term. Because if you say, let's just say, you're buying a stock at, I don't know, $400 and it's hitting a new 52-week high, and you say, I'm going to hold on to this stock for a long period of time. I think it's going to go double, 2x, 3x, whatever. But you wind up buying it at a short-term overbought situation, and you dig yourself into a little bit of a hole right away. You'll dig yourself out of it if it's a good company, right? But you're not maximizing returns. Maximizing returns is to identify these short-term pullbacks and enter in on the breakouts. If this were a short-term trade, I would look at the most recent swing high as a profit target. If this was an investment entry, I wouldn't care about resistance, would I? Right? I'm not using resistance, short-term resistance, as a means to manage the position. It's an investment. But as a swing trade, maybe you have this stock in your retirement portfolio. Didn't we say that a couple of charts ago? Right? We said that you could have bought this stock a year ago and still held on to it currently. There's nothing to say that you can't continue to trade it in another portfolio, right? Supplementing those long-term gains with very significant short-term gains. Okay? Hard right edge now, stochastics is still rising. You got your follow through the next day. The question always becomes, all right, you're telling me that's a good time to buy the stock, but was it a good time to buy stocks, period? So we were looking at October 4th, roughly, of 2022, right? Right in the beginning of October of 2022. We want to know if the market was telling us that it was okay to buy, and it was. October 4th, huge blast off day. The MTI went below 0.6, buy to sell ratio went below 0.2. Market blasted off. Absolutely a good time to start buying stocks. Okay? Again, this is a stock that you can buy and hold as long as it never gets a sell rating from VectorVest. And boy, you could have held this stock for the last 3+ years, because from May of 2020 all the way to current, it never got a sell rating. But do you see the pullbacks that occur? That's what a trader is looking for. An investor is going to analyze the stock for its fundamentals and determine intrinsic value and upside potential and risk. The idea behind that is you want to buy a stock, you want to feel safe about it, comfortable buying it long term, as long as nothing fundamentally changes about the company. You buy and hold it for a long period of time, right? But the pullbacks, boy, do they offer nice buying opportunities. This quick little trade could have netted us about an 8.5% gain. Breakout above support, retracement off of support, stochastics going above 20. The stock price pulled back a little bit after we took it, right? But never broke down below support, retraced, blasted through resistance, 8.5% gain, right? And that was at this candle right here. That filled green candle there, a little bit of weakness, a little selling pressure there. The stock price continued to go up for the next couple of days, formed a bearish candlestick formation called a one black crow. With follow through the next day, you take the trade off. A little bit right around an 8%, 8.5% gain. You think an 8.5% gain is not all that large, but you analyze it out, it's all about 140%. Not saying you're going to make 140% every year. I'm saying that an 8.5% gain in 2 weeks is significant. Okay, so now I take the trade off. I'm looking for another situation, right? I'm looking for another attractive price situation where I may look to buy back at a lower price. Remember this resistance level, right? After price breaks above that resistance level, what does it become? It becomes support. So I want to see price settle back into that, looks like about 375 support zone, and I want to see it settle back in and retrace from it. I'll take that trade again. Fast forward here, this was the hard right edge just a minute ago. It never did pull back to that 375 support zone immediately. Kind of rose a little bit afterwards, but then it kind of came back down. And you see this big red candle landed right at that 375 support zone. I would have loved to have seen a retracement off of it. That's another trade opportunity. It didn't. It blasted through it. But where did it land? To the penny at the next support level that we took the trade the first time. All right. So now we're looking for a retracement off of that support zone. We got it. Another buying opportunity. Remember, and now if this is a stock that you are holding in a long-term retirement portfolio, you're not making any money during this time, are you? Right? Stock is kind of moving sideways. So the average investment or the investment in this stock is not yielding any returns because the stock price isn't really going anywhere. You're recognizing that, and you're also recognizing these key support levels that might provide nice opportunities to profit in the short term, help offset losses that may have accrued in the short term with your investment when the stock pulled back, and now you're kind of recovering those with some short-term trades. Okay, let's take a look at another example. Same date, just a week ago, November 13, 2023, you got United Health Group. I mean, that's kind of best of breed, right? We all know about United. Price on November 13th was 542. We think it was worth 571, so fully valued there, fairly valued. Relative value strong, 1.27. Relative safety strong, 1.29. I know the fundamentals of this company are really good. Earnings per share of 27 bucks, earnings growth rate at 16%. They pay a dividend, rather nice dividend there, 1.39% yield. Earnings yield, little less, a greater than dividend yield. So their payout ratio is favorable, right? So great company. I would buy it and hold it for the long term, and as long as it continued to have a buy rating. You know, you buy it a couple of years ago, you're holding it all the way through. All the way through. Okay, fundamentals continue to strengthen. This is a great retirement portfolio stock. Okay, but along the way, again, taking our fundamental analyst's hat off now, putting our trader's hat on, boy, is this stock predictable, right? Non-trending, retracing from the same level 3 times. That's not a coincidence, by the way. And then finally breaking out through it. Okay? That's a signal that I would take in my swing trading portfolio. Okay? That's a signal that I would take. Price does make a new high, but comes back down. And where does it stop? It stops right at the same level where price used to be at resistance, about 375. This 375 resistance zone, once the price broke through it, it becomes support. Happened again. Happened again. So you bought this stock off of this support level. You bought the stock off of this, well, I'm sorry. You bought the stock off of this resistance breakout. You traded again off of this support retracement. You traded again off of this support retracement. You profited 3 times from a position where in your retirement portfolio, you're not making any money, right? Just kind of moving sideways, but you're supplementing the stagnation in that portfolio because the stock price during that time period did move sideways. So your investment in this position, again, is not yielding any returns, but you are a much better, more well-rounded trader and investor. And you see these situations where you say, look at this, another retracement off of this support level. Why not? Why can't I trade it? I know I hold it in my retirement portfolio, but why can't I trade it? Of course you can. Okay? So now you had a break. So here's another situation. You had a breakout above resistance. That resistance level, which we saw being established here in March, June, September 2021, becomes support, and you're just rinsing and repeating. You're buying off of support. You're buying off of support. You're selling off of retracements off of resistance. You're buying off of breakouts above resistance. You're buying back off of support levels. Okay, doing this time and time again, over and over again. Again, you have this portfolio in the stock in your long-term portfolio, no problems. You're not considering selling it. It's got a buyer or hold rating the entire time, but you're just continuing to trade these favorable price and volume situations. Okay, so everybody with me on the approach, right? The basic concept of what we're trying to do. Question becomes is how am I going to find trades? All right, there is the one by one method. Okay, the one by one method. That's where you look at a list of stocks and you go through the work. You do the work, right? You and the good thing about VectorVest too is any list of stocks that you open up, it's sorted from best to worst, right? Sorted by VST, our master indicator, combines value, relative safety, relative timing. So you know the stocks at the top of any list are going to be good companies. That's just, I mean, to think about how easy it is within the VectorVest program to just determine and identify a good stock from a bad stock, a good company from a bad company. Okay, a company that grows their earnings predictably and consistently, quarter over quarter, year over year, compared to one that doesn't. Very, very simple, with our analysis. Okay, using a scan will speed up any process, any stock selection method. Using scans speed up the process. And it doesn't. It's not a science, right? Or it's not an art. Okay, and it's not overly difficult. It's as easy as, hey, I want to find companies that are strong, but I want to find them after they've pulled back and have begun to rally again. So this one little search here, prudent performers, stochastics above 20. It's not a search that you all have in the program. You have the prudent performer search. I just added this one line to it. What does the prudent performer search look for? It looks for stocks earnings growth rate to be greater than 15%. All right, we know that that's what we want in a fundamentally strong company. We want the relative safety to be above 1.15. We want the relative value to be above 1.25. We're sorting that list by VST descending. This completes our fundamental perspective, our fundamental analysis on the stock. Knowing that the earnings growth rate is above 15% and the RV and RS are well above 1 and we're sorting by VST descending, I know that no matter when I run this search, if I ran it as of right now, the prudent performer search what kind of stock do I have at the top of the list? Look at the RVs, look at the RSs, look at the earnings growth rates. Some of them do pay a dividend, some of them don't. Most of these, if not all of them, are undervalued. Okay? Strong companies. Strong companies. Notice the RTs, very strong too. I want to look at, let's say, GNE. Looking at the current price and looking at how overbought the stock is in the short term, would I just run out and buy it today or tomorrow? Today the market's closed. Would I do it tomorrow? I don't know. I think it's a little overbought. I think there's some consolidation going on. Do I want to just say, okay, I think this stock is going to be $50 in 2 years, and I'm just going to buy it now because it's at 25? That's not how you want to go about it. Okay? Stochastics is overbought, also seeing a little bit of a bearish divergence between stochastics and the price of the stock. Again, putting our traders' hats on now. I think this is not a good time to buy GNE. Okay? I want to wait for a pullback. I want to wait for a pullback. Let's go to the next one. How about SMCI? Same thing. Stochastics is a little overbought. Price is at the upper end of this range. Kind of stalled out today as well. I don't think this is a good time to buy this stock. I would love to see it come all the way back down to 236. And if you take a look at when it did, stochastics crossing above 20, good little short-term entry, sure. Stochastic, now stock price retested the old swing low, which is establishing support. Price retracing from support. Stochastics going from below 20 to above 20. Good short-term opportunity, yes. Again, retraces, retest that same 236 zone. Stochastics goes from below 20 to above 20. Good buying opportunity, absolutely. So the search is great. It finds the quality of stocks that we're looking for. But I want to find them at a better price. I want to find the same type of stock, but at a better price. So if I were to go to stocks, if I were to add a parameter here looking for stochastics to just cross above 20, I'd go price split adjusted, pro trader, look at stochastics. My value is going to be 14.3 slow, crossed above 20 in the past couple of days. So now if I run that search, only 3 stocks today, but I think I like the buying opportunity here a little bit more with this particular stock, Arch Capital. I mean, what we know, it's a fundamentally strong company, don't we? It's baked into the search. Undervalued, good upside potential, safe. Look at that earnings data. Fantastic company. Okay. Man, I would have loved it after this pullback and the stochastics oscillator crossed above 20. Man, I would have loved it here after it pulled back and the stochastics oscillator crossed above 20. Man, I would have loved it here again, right? Pull back, higher high, higher high, higher high, pulling back, establishing a higher low. This indicator is telling us that, you know, we're no longer oversold anymore and we're beginning to trend. Kind of seeing the same thing now. Early stages, but I like the pullback and the better buying opportunity. Then it would have been, let's say, to buy it there because we like the company. I don't want to buy it there. I want to buy it at its 52-week high, even though I plan on holding on to it for a long term. I'm looking for a pullback, and we got one. We got one where the stochastics went from below 20 to above 20. Let's look at the next one. Here's Renaissance, a little bit more of a volatile stock, but it's still a fundamentally good company where it's just recently pulled back to an old high. Whoops. Pulled back to an old high. See these old highs here? This is where the stock pulled back to and is retracing from it. Love the buying opportunity. Love the setup. CELH, my wife loves these drinks. Price action a little bit, you know, stagnant here, moving sideways, but at the lower end of this range. Stochastics just crossing from below 20 to above 20. I would wait for a little pop off of the support level, but love the setup nonetheless. But I need to see the pop. I need to see the move off of support before I'd want to trade it. Okay? Great little scan here to find oversold stocks, oversold good quality companies. From November 1st, so that same little scan there, from November 1st was when the primary wave first turned up to current, 10%. Actually, that's November. That was just yesterday. Yeah, 10%. You had NVIDIA there. Let's take a look at NVIDIA. There's November 1st. What a setup this is, huh? Look at where price is. Right at support again for the 5th time. Stochastics cross from below 20 to above 20. That's when you could have bought NVIDIA just recently. So if you're an investor and you're looking at NVIDIA saying, you know, I just don't see a good buying opportunity here. Not only was the market kind of, going through some rough times, they just didn't see a good buying opportunity. You now are better equipped at understanding and putting yourselves in position to buy these good companies at better prices because you're applying the insights of technical analysis. Okay? You might be asking, well, how can I take my game to the next level? You're understanding this approach. never really considered doing this before, but you want to know how to take your game here to the next level, you got a choice. You could do nothing, okay? You could do it alone, maybe take bits and pieces of what I taught you today, or you could just let us show you how to do it. And that's kind of my preferred method. Anytime I want to learn something, I want it to be as painless as possible, right? So I just want to be given answers, and that's why we put together this course called Uncovering Trends, Technical Analysis the Easy Way. All right, so it's a complete 6-module course. We combine and merge in this course fundamental valuation and technical analysis. We merge the two. We don't trade junk stocks, and we don't buy junk stocks. We make sure that the pool of stocks that we are swimming in is quality. Okay, but we're applying industry standard, tried and true technical indicators to help identify favorable opportunities to buy. This maximizes returns in the long run. You may not think that an 8% discount is significant, okay? But if it's a stock that you want to hold on to for a long period of time, an 8% discount is significant because it's compounding year over year. And just as price increases, your percentage return exponentially increases because you were able to get in at a discount. So the complete course is 6 training modules. By the way, 60 plus lessons. There are so much content in this course. It's fantastic. Videos, slides, resources, 1-year access to the course. This is a mastery class, so we're going to be doing live bonus sessions. We're going to do 7 of them. 7 live mastery support sessions. You get private dedicated email support from your instructors. You get 70 days access to VectorVest Premium if you don't already have it. This includes the Pro Trader technical scans, very important. Here is the layout. Here are the 6 modules. The 6 modules are pre-recorded. Myself, Mr. Ron Wheeler, Mr. Stan Heller, and the late, great Dr. David Paul, recorded these modules a couple of months back. And they're there. Once you go in and register, you'll see all of this content here in your course outline. We start off in module number 1 with a little bit more about what I talked about here today, difference between fundamental and technical analysis. We laid out foundation. We emphasize the importance of market direction. Then we get into price structure and volume analysis, candlestick trading, technical indicators. There are, I think, 16 or 17 different technical indicators that we'll teach in module number 4. And then trade management and psychology. So trading tactics and then how to manage ourselves once trades are taken. Okay, and then the VectorVest Advantage, looking at the Pro Trader searches, near perfect indicator. Okay, now this course, very complete course. I think this is the most content we have in any course that we teach. $1,990 is the list price. There is an early bird rate for $1,495. But guys, I want to thank you for being here today. I'm going to knock an extra, roughly, half off there from that $1,495 rate. $895. You get the complete course, the 6 pre-recorded modules, the over 60 lessons, the 7 live mastery support sessions, the dedicated email support, VectorVest 7 Premium if you don't already have it, for $895. I just typed the address that you guys see at the bottom there in the chat box. VectorVest.com/trends. You can click on it. You'll see that $895 rate, which will only be available for a very short period of time. Now, this is 100% money back guaranteed. If after the course is over, you've done the work, you've done any assignments that we give, you watch the recordings, the live mastery sessions, by the way, are recorded and uploaded to the university within 24 hours. If you're not satisfied, we'll gladly give you a refund. But you have to complete the course, make sure you've done the work. So, when are the live sessions? What if I miss one? Don't worry if you miss one. They are recorded. They're uploaded to the university. We begin 2 weeks from tomorrow. December 6th is our first live mastery support session. All the sessions begin at 1 p.m., and those are all Wednesdays, I believe. December 6th, is a Wednesday. We had to break up module number 4 into 2 mastery sessions because there's just so much in there. It's a beast of a module. So we cover the first half of the technical indicators in part one, second half of the technical indicators in part two. Okay. All right, guys. Any questions at all on anything that I covered today? If you already, Eric says, if you already have VectorVest Live, what's the price? It's the same. Just consider, um, us giving 70 days access to somebody who doesn't have it. 70 days access to VectorVest Premium to somebody who doesn't have it, just like a trial. It's the trial that you took, right? Or anybody that has VectorVest Premium originally took a trial to it. So um, that's what we're offering to someone who doesn't have VectorVest Premium is a trial to it. Okay, but there's no discount if you already have the VectorVest Premium program. Lloyd's asking, does it work with an iMac? This is a course. This is an education course. Does the VectorVest program work on an iMac? It does if you have parallels and you've partitioned your hard drive and you have Windows on the Mac. Okay, so Lloyd, this is just a course that sure you can watch on any device. Okay, awesome, Eric. Elite pricing, Damon is asking, 795 actually. So that's the elite rate. Elite rate is always available for you guys at 795. So um, uh, the 895 is for non-elite subscribers to take advantage of this very special price, only available for a very short period of time. Okay. Emil's asking, is there a refresher course price? There is no refresher course price for this course. Depends on Emil. If you this course was released less than a year ago, so if you took this course in one of our first launches, you still have access to it all. Remember, you have access to it for a year. So it hasn't been a year since we did our first class. So if you're confused about that, give our support department a call. Okay, you're welcome. Sandy's asking, is Tesla fit for this type of portfolio? What type of portfolio? A long-term retirement portfolio? I don't know. Let's first take a look at the stock's price over the last year. They don't pay a dividend. Okay. Um, right now, if I'm looking to trade Tesla, what am I seeing? I'm seeing almost a descending triangle here. I would wait for the stock to break out above that trend line there before I would buy it. Now, I want to do our face value analysis though and really kind of dig in. We know Tesla's Tesla. Is it a fundamentally sound company? It's overvalued. $241 price. We think it's worth 90 bucks. The RV is low. RS is at 1.4. Okay, so it's a safer investment. Doesn't have a lot of upside potential. Again, they don't pay a dividend. Earnings yield 1.66. Earnings growth rate good for 15%. It's just a little bit overvalued. I don't know if Tesla is a retirement type stock. It's a stock that I would trade if I saw, again, if I'm looking at the chart now and I see a breakout above that zone there, I'd trade the stock. I'm not sure if it's quite an investment, a long-term investment. Okay, looking at a 5-year chart, well off of the $400+ high here. So, what is this? Looking at 2 years. This is price action over the last 2 years. Not sure if this is a great investment long term, based on our indicators, of course. All right. All right, guys. Hope you guys enjoyed today. Learned a little something. I really hope you did. Looking forward to working with you guys. We start in 2 weeks. Go to vectorvest.com/trends. The $8.95 rate will only be available for a very short period of time. Okay. We will be sending out a recording that I did earlier today on this webinar, so you'll get that a little bit later this evening. Yeah, good. So Santi says, I'm holding Tesla for the last 3 years and try to trade it as well. You got it, man. That's it. That's it. Stocks that you're holding for a long period of time as long-term investments, you can trade along the way as well. I would just kind of I wouldn't say argue with you, but I'm not quite sure. You've been holding it for the last 3 years. It's been pretty brutal, hasn't it? Last 3 years, 2 years have been pretty brutal. Um, yep. Oh, thank you, Patrick, for reminding me. I'm going to put the slides in the handout section of the go-to meeting control panel. And Santi says it is. It has been brutal. Look, you can find better candidates. You can find better candidates. Ready? Okay. This is just a prudent performer search. You can find better candidates than Tesla. Love Arch Capital. Love EDU. ANET. Love the chart. I'd wait for a pullback for this one as well. Maybe back down to this 198 support zone. So, guys, there's so much I can teach you, but we do it in the course. It's fantastic. There's so many things that you can learn here in terms of identifying much more favorable price and volume situations to get a discount on every stock that you buy. Arch says, will modules be available on an individual basis? All these modules are pre-recorded. They're in there. It's like Netflix. So each module is individual, sure. Once you get into the course outline, you'll see how it's all laid out. It's all there for you to watch now. When we start our first mastery session on December 6th, we will cover the contents of module 1. You should have already watched module 1, and then week number 2 we'll cover the contents of module 2. You can watch them all at like Netflix. You can binge watch them all, or you can just go week by week if you wanted to. Jim says, do you get access to the searches, or do we have to modify? Example, stochastic greater than 20. There are no searches for this course. Everything we have everything in the program. You have everything that we will ever use during this course. If there's a modification that's made, we'll go over that during the mastery session. You'll learn how to do that. Okay. All right, guys. Have a great rest of your evening. We'll see everybody very soon. Take care, everybody.